Africa has become a huge part of our business. It's over 20% now, and you would have seen from the results that we've more than doubled the profits out of Africa over this past year. It's not only that we're doubling the profits, we also have better margins in Africa. So we're seeing increasing volumes, better margins, and we really see us as where we're going to grow in future. That's our expansion. Our main expansion is going to come out of Africa.
I mean, when you look at Angola, you know, last year we were talking about the capital expenditure plans there, and this year you're being able to really realize the fruits of that expenditure there. You're running at full capacity. What type of contribution you're getting from that can business, and are you exporting for outside of Angola?
Yeah, well, Angola is a very good example. About a year ago, maybe the last time we spoke, we were doing about 20 million cans a month. We're now doing 60 million cans a month. We've run out of capacity. So we certainly are unable to supply cans from Angola anywhere else, although there is a demand elsewhere. And clearly the next step in Angola is to now start putting other lines into Angola. So, you know, within a year we've run out of capacity. The turnover out of Angola is already over 700 million rand, so it gives you a sort of perspective on how big this business is, and it should be over R1 billion in the next year or two. So certainly that's a typical expansion story in Africa. As you put in the capacity, you run out very quickly and you need to add additional capacity. Clearly also for us, we're looking to put in other Nampak products. So we're looking to put closures, for example, into Angola next, and then bottles and then crates and all the other things we do. So we've started with, in Angola, beverage cans, but in every country we start with one of the Nampak products and then we look to grow from there.
So, you know, creating a mini Nampak within all these territories. One of the markets you're looking to move into now is Ethiopia. That's with supplying crates to Coca-Cola. So is this the strategy where you tap into an existing client relationship you have? For example, in Angola it was SAB Miller, and now it's Coca-Cola in Ethiopia, and then use that as a starting point? Exactly.
So in fact in Ethiopia we've signed a long-term supply contract with Coca-Cola Sabco, which is actually a South African-based bottler. So they've expanded already into Ethiopia. And we're going to supply them with all their crates for the next few years. Clearly as part of that we're also talking to them about other products that they need, and you know, once we're up and running, which should be by the middle of next year in Ethiopia, we've ordered all the equipment, it's all going ahead. We will then look to supply other customers there, so Heineken and SAB and all the other multinationals that are there. It's obviously a hugely exciting country because there are 80 million people there, 80, it's absolutely enormous. And Coca-Cola Sabco have massive investment plans in place, so do Heineken, so do Pepsi. So we see a huge opportunity there. So, you know, that we see as the next big market that we're looking to tap into.
What about the strain on resources and managing kind of this growth in a sustainable way? I mean, how are you kind of allocating resources in a way that you know that it's not going to be detrimental to the company by just kind of going into the growth areas as aggressively as possible?
Yeah, it is an ongoing challenge. We need to obviously protect our main base, which is South Africa, and we need to grow in line with our South African customer base. So if SAB or Coca-Cola or Heineken or any of our major clients, Tiger brands, are growing here, we want to grow with them in South Africa as well. But we do have dedicated resources growing in Africa, and we have huge expat teams operating in each of these countries. And their challenge is not only to look after those countries, what they have at the moment, but to grow in those countries. So, you know, they may be in metals and we'll be saying to them, why aren't we in plastics or paper as well? So, you know, their challenge is to grow into mini Nampaks in each of those countries.
What about Nigeria? You had a bit of a tough year there this year, and it's interesting because, of course, it's the market that most people are very excited about. I was just speaking to Tiger Brands earlier today, and they've of course made a big acquisition there. What are the prospects in that market?
Yeah, we've got two big operations in Nigeria. Our cigarette carton business, they actually had a very good year. So it shows no matter how tough the conditions are, people have continued to smoke their cigarettes. So our volumes there grew, profits grew, and that business was fine. Our second operation there, that one is in a place called Ibadan, about 120 km north of Lagos. The metals business we have in Lagos had a tough year.
Well, we can't let you go without talking about South Africa. I mean, still 80% of your business. What are the prospects for the South African market now, in light of the fact that, you know, everyone's concerned about the slowdown across the board in the economy?
Yeah, we've seen the slowdown. Having said that, though, we've got some quite exciting projects on the go. On the beverage can business, we've seen a huge growth in beverage cans in South Africa. As people get wealthier, they prefer the convenience, the recyclability of cans. And we've seen our can volumes growing very significantly. So if you look at products like the health drinks, the diet drinks, all of those are growing in cans. Beer volumes have grown massively in cans. And that's really at the expense of other packs. So it's even if the beer volumes have only grown 2 or 3%, we've seen growth of 15, 20% in our can volumes because they've taken share from other packs. So we're very optimistic on that, and we're investing quite a lot of money, over 600 million rand in cans at the moment.